why should you be afraid of it, or even if you should be, and you shouldn't be. There's not going to be like a huge super spike in inflation at the track that we've seen the economy going how it is. Inflation is a normal thing that will happen naturally. Are there ways to fight it? Yes, there is.
What's up, everybody, and welcome back to YBI, where we discuss opinions and strategies on how to better your financial selves. Roman and Zion here, back at it again.
What up?
What's good, my boy?
Doing what it is. Living off
Doing what
these
it is.
good dividend profits at the moment right now.
Oh yeah, you ain't lying. You ain't lying. I think my portfolio is up at like 5%, 6%, something like that. So we looking good. We looking real good. We are back today to talk to you guys about inflation.
I
Dun, dun,
know you said that
dun.
so quiet, but it's such a big thing. Or maybe actually it probably is more of a small thing than a big thing that people are kind of making it. Actually, let me switch these around. Those like that because that's more comfortable for me. But yeah, inflation and all the things that it is. So first off, I know a lot of people that's probably watching this channel may start off there, or you probably heard a lot already if you are watching the news. But what is inflation? Inflation is when you hit the like button below, you show this to your friends, you hop on a Discord, you go down below, you hop in Webull, you go on M1, you start your portfolios, you get this free money, you multiply. Okay, we start making these things happen, and that's inflation.
All right, well, let's sign out. Inflation, the definition, an economic process of prices increasing over time. Very simple.
Very, very simple. And here's the thing: is most economists say that any influx of money or increase of spending in that sense will increase inflation in that moment. A healthy rate of inflation, we usually see it over the years in the U.S. usually floats somewhere between like around like 2% normally. So
1.2% is where it is currently right now.
exactly. So when people are, I guess what the first thing start off, where does this newfound fear of inflation come from? Inflation happens all the time. That's why you hear people say, back in my day, a gallon of milk used to be 25 cents. Inflation. It's the exact same principle of that.
That's a big thing.
It's a very big thing.
You hear that same phrase where people are like, in today's money, like when people are talking about cars and they're talking about old vintage cars, saying like when I first purchased this car, it was only like $17,000. In today's money, it's like 40,000. No. I'm just saying, like, when they originally bought the car, it was like 17,000, but now in today's money, that would be the equivalent of like 30 something $1,000. Yeah, so that's what inflation is. It's that, for the same thing, you're paying a premium, an in quote premium, but you're actually not, because we get paid more, but you really don't. But you kind of, all right, let's talk about inflation.
That tracks on the whole kind of topic of, normally as prices go up, wages should be going up, and that's the whole whole conversation about the minimum wage. We talk about that a whole different time. But in accordance with inflation, people are worried about it. Why are they worried about it? It's been really came from the stimulus packages. There's been a very big influx of money to our money supply, our M1 money supply, to where people are thinking that, that's going to raise inflation. Prices are going to go up. Things are going to go up like crazy. I need to protect my money. I need to put my money in different hedges, get it out of cash and move it somewhere else where it's going to grow somewhere else, i.e. like crypto or short squeezing GameStop or somewhere that's actually going to earn money. Whereas if you put your money kind of just in a savings account, it might lose money in that sense. So
lose money. That's the thing.
Money
you're not actually losing money, because you're still getting like the percentage that you're going to get. But at the same time, you can make more by putting it other places. So you're never losing money by putting it in a savings account, but you're not increasing it as exponentially as you could if you had put it into something else.
No, yeah, that's why a lot of people, when you finally actually do your retirement kind of breakdown and you trying to go through how much money do I need to have invested or saved to live off retirement, most people forget this, but you need to account for inflation, because $20,000 today is not going to go as far as $20,000 20 years from now. It's just, it'll be the same $20,000. It just won't get you as much in the market. It just won't. It's the way the economy works. Until we have a new system or pretty much anywhere set up, it's how it goes. So you kind of have to account for that. And that's why usually you kind of set for your retirement accounts or for your investments to almost track, 5 to 8%, because you want to have that 2% room in there for inflation to kind of offset that as well. So also think about that while you're setting up your retirement accounts, is to think about inflation, because it is part of the economy. It's forever going to be there. Better idea to buy. Tangent.
Yeah, so pretty much people believe that, oh yeah, as like prices start going up, you start getting paid more to kind of keep it at an even playing field. And then a lot of people are just like, well, why don't we just print more money? That actually does the opposite, where if you just start printing more money, you oversaturate the market, and now everybody's got a bunch of money, which means that prices again start to increase.
See, that's where today's confusion comes from. That's old school inflation right there. Normally inflation would skyrocket from, that's what most economists would usually think, and that's what some economists still say. But after all the podcasts and YouTubers out there have kind of researched and gotten together, and some other heavyweights have kind of said that that's not necessarily the case. Looking at what's going on, there is a big influx of money into the market, but at the rate that it was brought into the market, i.e., printed from the Federal Reserve at a negative interest rate, where the federal government's actually kind of making money off of printing that money, and where that money is actually going and where it's being spent on an American economy. Like, it's not really being spent on new products and services necessarily. It's being more spent in savings actually, and investments and such. So it's actually not raising inflation as much as what people thought it would be doing. So it's weird. It's like it's like inflation's not doing what inflation normally should be doing, and the normal economic definition of it that we usually have for
That's the thing though. That's what COVID's doing though. You know what I'm saying? Like at the end of the day, you have to look at the other things that are happening in the economy that are going to counterbalance inflation. So things that are counterbalancing inflation is the fact that people aren't spending money because we're in a pandemic and people can't go nowhere, people can't do nothing. So I mean, that could be the very reason why pushing more money into the system is actually evening it out. Whereas normally printing more money would create more inflation. So
it's interesting, and we're kind of, this is not we are not economist experts or anything like that in regards to that. This is just research that we've been doing. So of course you want to learn more about this, I can even put a couple links to a couple shows and articles that I've listened to recently that I thought were really good and informative. But it really comes down to what we really want to make this video about, is to give a definition of inflation, and also why should you be afraid of it, or even if you should be, and you shouldn't be. There's not going to be like a huge super spike in inflation at the track that we've seen the economy going how it is. Inflation is a normal thing that will happen naturally. Are there ways to fight it? Yes, there is. What is a way to fight it? Zion, can you think of one?
A way to fight it?
Yeah. How can you fight back inflation?
I mean, we talked about this earlier. You talking about with our different hedges?
Yeah.
So as you said earlier, Bitcoin and putting your money into like precious metals, things like that, don't tend to be infected by inflation. They tend to retain their value across the board. So if you're going to get something like Bitcoin or something like a precious metal, and we're going to go ahead and link precious metals down below so you can get into that. We can also link Bitcoin down below. We've done a couple of those videos. But if you're looking to do those types of things, then you're going to have something that's a little bit more stable and not necessarily infected by inflation across the board.
I don't know stables. I feel like the dollar's maybe more stable in that sense, but something that might make more money. It has a higher risk tolerance, definitely, but it might have a higher payout. Like, if a stock's going up 20% one day, you're gonna make your 2% plus more off that investment right then and there. So you're already beating inflation in that standpoint. A lot of times you hear a lot of wealthy people and them having maybe 5 to 10% of their net worth in cash. Liquidable, they can go right there, spend that money, no problem. Everything else is either leveraged and real estate and stocks, bonds, whatever. And that there was a sense of that to really fight against inflation, so their money couldn't either be touched right away because it was somewhere else, or it was making more money and not being wasted there. And we're kind of seeing a little bit of a reversal this past year. A lot of people are now saving more of their cash and not spending as much of it. And then when they did have extra cash laying around, they were throwing it in different investments and different hedges. With the rise of like NFTs and things like that too, you really seeing people finding different ways to just hedge their money and grow their money in different ways. So interesting. I'm interested to see how 2021 goes with NFTs and all this.
I mean, we got to get into NFTs soon.
So it's coming.
To give people.
It's coming.
If y'all don't know what an NFT is, just wait. We're gonna get there. I know that you were saying CD ladders was another good bet, another safe bet to go against inflation.
Bonds are for sure. CDs can be a more cash ready one, because you can find a CD with a interest rate of like 3% or something that's already above inflation rate, and you hold that for 3 years or whatever. That money's constantly making 3% no matter what. You're beating that. You have other CDs doing the same. You can do it with CDs too, or even there was a time when savings accounts are paying over 2% in early 2020 and pre that.
You mean back in my day?
Back in my day. In my day, my money used to earn. And even then, that was only not for that long. So, and that was beating inflation right then and there. And you could just put money in a savings account and it would earn a good amount of money for you right there. So there's definitely a lot of ways to do it. Once you get to that point, though, if you don't already have your first, emergency fund set up, you're kind of, like house, nest egg, and what else should people have? Your debt paid off. Ooh, almost forgot about. I was like, what am I thinking here? Your debt paid off. You should really, focus on those things first before you even get into this realm. But this is something to start thinking about too. Is just do not be afraid about inflation. Do not sell everything you have and try to hold on to cash. Don't do that. You'll be fine.
Sell it all. Burn. Oh no, we're not. Yeah, we're not gonna do that. Just like we say with so many of the other things that you can do, these are long-term plays. We're not necessarily looking to flip money right away. We're looking to make sure that you have long-term wealth. Long-term wealth. We're looking for that type of thing where we can say, you know what, I may not be able to make, $100 tomorrow, but I can make $1,000 over a year if I put it into this, or if I put it into that, or the percentage rates are a little bit better here versus the savings account. So being able to put money into different places that are going to, one, fight against inflation, or beat inflation, that inflation rate is going to make sure that you continue to grow wealth long term versus just trying to do something, right now today.
Mm-hmm. Well said. Well said. All right. Inflation.
I be knowing words sometimes. Inflation. Do we need to say anything else about inflation? I feel like that was
it. And
pretty
inflation,
simple.
guys, know it's there. It'll always be there, kind of like taxes. It's always there. It'll be chilling there, but don't necessarily worry about it. It'll just happen.
Yeah, I mean, you can take note of it. I mean,
take note of it.
when you
do your retirement, when you do your retirement planning, and you're like, it takes me to live off 20,000. I can live off $20,000 per year at 2% of the just add 2% to that total every year for like 20 years or whatever, and whatever that additional is, add that to your savings plan. That way you kind of just know that going forward and round that off. That way you've already beat inflation right then and there over that course.
And what's really nice is that you don't even have to do that math. If you're using Vanguard, or if you're using these different, Charles Schwab, whoever
There's so many different websites to be able to calculate that.
They have everything. My retirement account has everything. They're like, this is what you're vested right now. So this is the amount of money that I've currently put into it. And this is how much we've added to it. And this is what you're looking at in 20 years. And if you pull it out early, this is what it's looking like, and blah, blah, blah. And if you add 1% more from your checks right now, this is what your projected is. So all of that information is already like, it's done for you. So don't worry about getting out a calculator and just trying to figure that out. Nah, just go onto one of the sites, continue to put on all your information, make it a little bit accurate, and then it'll tell you exactly what to do. And consult a financial planner, especially when doing your retirement planning. Make sure that you're talking to somebody that really knows what they're talking about for retirement.
Well said. And I think it can never be said more on this episode than ones that we've ever done, though. but hit that like button.
Let them know. All right. We're gonna go ahead and wrap this up for today. Did we miss some? No, we didn't. As always, you guys know what's up. Like, share, subscribe, and we may be young and we may even be broke, but we are always investing. Thank you guys so much. Till next time. Peace.
Peace. A little tangent right there for everybody. Discord link is down below if you guys want to hop in there. I'm in there most of the time, always ready to chat about finances or questions or just investing.
I'm in there
like
too.
That. Hop in there. We're in there. We also like to just talk about other things too. Hit us up, guys. Peace. Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the hosts. They're not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody and have fun and be safe.